Thank you so much, everybody, for joining us. I think Jennifer and the other previous panel, I will probably take a bit from there as well. Obviously, our panel is to talk about investing in African innovation, but I also want to talk about financing and funding, which is probably quite key to sustain startups. As I mentioned earlier, that we are seeing a lot of African fund managers invest in startups as well. So I'd like to start something with that, with you, Ola, really. With the turmoil, trade turmoil, and the gutting of US aid, will it lead to a slowdown in US investment in Africa? And do you think startups should see other geographies and other Martha mentioned about corporates. Is that an option? What is the next step for startups?
So I think that the cuts in USAID funding and donor funding have spurred a really good private sector opportunity, actually. If Healthcap Africa is the largest venture capital fund on the continent focused on fintech and health tech, and some African countries were relying on USAID funding for up to 20% of their healthcare budget. So it's a huge gap. But what we're seeing is an opportunity in this tragedy to really develop sustainable private sector solutions for healthcare that can't be taken away overnight because they're real businesses. So as this donor type funding is leaving the continent or has been sort of greatly reduced, we're seeing an opportunity for more of an investment case to be made for Africa. And we're also seeing a lot of local funders, local pension funds, local families investing in innovation on the continent. Healthcap Africa, for example, our first fund, which was raised in 2015, was actually all African families. For our first close, we had one major institution, and the rest was mostly African families. So we're seeing, I think, sort of three major trends. Number one, with regard to your question, we're seeing, the sort of donor funding being cut, but more of a business case for Africa being articulated, and that can only be a good thing. Number two, we're seeing more local funding, and that's super exciting because local money comes with local relationships, comes with local doors being opened, and that's important for any business, and I'm sure the startups will speak to that. So yeah, I'm excited about the future of innovation in Africa, and I think that donor money going out doesn't necessarily mean investment money going at the same time. I think that I think that we're looking at private sector trade focused growth, which is better at creating jobs and economic opportunity.
Thank you for that, Mola. Sergio, let me ask you this question. I mean, you run a company called Anda, and that kind of, it's like an Uber in Angola, but it's also a financier. What difficulties do you see in kind of tying up with or seeing VCs as you look to raise funds?
Yeah, thank you so much for that. Well, the main challenges that we actually face aren't VCs or international VCs. The challenge that we have is that we don't have a lot of local VCs. So Angola is a context with a very nascent startup ecosystem that is very promising, but it's a sort of a chicken and egg problem. So what comes first? Do you have the VCs or do you have the startups? So we ended up raising funds for many international strategics, angels, and also now VCs. So it's definitely a challenge about getting the name out of our country, speaking about the challenges that we face in our context, because at the end of the day, obviously Africa is very far from monolithic, and what that means is there's many challenges or big challenges which are endemic to our local context, but are actually pandemic to the whole continent. So it's really about showing that whatever our solution is in our countries, that it is something that can scale across the whole continent.
Thank you for that. Sneha, you run a company called Uncover, consumer brand. You told me earlier that you're looking to raise funding. Where do you see that funding actually coming from nowadays?
Yeah, it's changed a lot in our 4 or 5 year journey. In the beginning, it was angels, that backed us, and there wasn't a lot of capital for consumer, which has a very strong physical aspect to it. There's a lot of fear around managing inventory, around working capital, heavy businesses across the continent, and businesses that require last mile distribution. And so we really had to prove traction to start attracting institutional capital. When we started attracting institutional capital, it was a mix between Africa and global. Globally, we saw a lot more interest because there was a precedent for consumer brands scaling and exiting at high valuations, growing rapidly. Whereas in Africa, actually, we didn't see that many consumer brands that were Pan-African growing. So it was, again, a mix of African VCs and international. What's interesting is in our last round, it was 80% international. So we attracted capital from Silicon Valley, this region. So one of our lead investors is from the Gulf. And so I guess we're seeing two trends. One is a growth in local capital, local funding, but it requires a bit more proof, is what we're finding for our sector. And when there is proof, we're seeing that local capital is willing to back us, whereas international capital, we're finding a higher risk appetite, or maybe just a sector that they understand a little bit better. We're finding a little bit more understanding of our sector internationally.
One last question on financing before we move on to innovation, all of you, is that I think it's important for exits to happen, right? For more investors to start looking at Africa. Do you agree with that, or?
So I don't think liquidity is an African problem. I think liquidity is a global problem. And in America, for example, the IPO markets have been quite shy. There's not been very many IPOs for the last 2 years. And also the mergers and acquisitions, because of the sort of global uncertainty, have not been so active either. Actually, 15% of all private equity exits last year in America were via continuation funds. So that means that the stake in one fund was sold, well, the stakes in one fund were sold to another set of limited partners. And that's something that's really growing, this idea of secondaries and continuation funds as liquidity options, and that's in America. Whereas in Africa, we have seen exits. If you look at the Nigerian Stock Exchange, for example, some of the most actively traded stocks are our technology stocks. So I do think that there's a healthy market both for IPOs and exits in Africa. But I think the issue of liquidity in private markets is actually a global problem that American private equity companies are solving via secondaries, via NAV loans, and via continuation funds. But I do think that there's a good, healthy exit market in Africa right now. And actually in our first fund, for instance, we had 2 exits. In our second fund, we've already had 1 major exit. And we're reporting DPI's equivalent, at least in our funds, to the top tier of American funds. So I want to sort of change the notion that Africa uniquely has an exit problem, because we're seeing like the rise of secondaries, for instance, companies like Stepstone, companies like Lexington, raising $20-30 billion funds just for secondaries.
Thank you for that. And Ola, I'll stay with you. You've obviously raised 2 funds, you've said. Where are you seeing the most disruptive innovation on the continent?
So Healthcap Africa only invests in 2 sectors. We invest in health tech and we invest in fintech. I'm a medical physician by training and a financier, probably by necessity. So actually just finishing my PhD in finance, I'm focused on fintech. These obviously for me are the 2 areas where we're seeing sort of the most disruptive innovation.
Can you give us an example as well?
Oh, absolutely. 70% of all mobile money transactions in the world happen in sub-Saharan Africa. So when we think about financial technology, whether it's payments, whether it's social finance, whether it's savings innovation, we're seeing sort of the most disruptive technology platforms in Africa. I'll give you an example of a company called Paystack. I backed Shola at a valuation of $1 million in 2016. That company was sold in 2020 for over $200 million to Stripe, which is an American payments company. There's a company called Flutterwave, also in Nigeria. Again, we invested in that company at around $2 million. The last round was $3 billion, and they've been backed by a number of local and US VCs. So these are the examples of the growth trajectories that we see in Africa, but not just the growth trajectories, actually the efficiency in unicorn production. So if you compare the US market to Europe, to Africa, you find that actually we're far more efficient unicorn producers in terms of dollars that you invest to produce a unicorn than either the US or the European market.
That's quite interesting. Thank you for that. Sneha, how are you using AI to kind of scale your business, you would say?
Yeah, that's a great question. I think for us, AI comes in the personalization. When we started Uncover, we launched a survey. We got over 20,000 data points from women across Africa, and the number one pain point when it came to women's wellness was knowledge. How do I take healthy care of my skin, my hyperpigmentation, my acne? And what we realized is that there was a huge opportunity for personalization and offering women high-quality, healthy advice that was personalized to their skin tone. And so what we are doing with AI through our AI shopping agent, our chatbot, as well as our personalized skin quiz is leveraging AI to offer women personalized solution. When we think about women's wellness, healthcare, skincare, what we realize is that I think there's a stat. There's 40 dermatologists covering Nigeria's 200 million population. So the access to expertise is extremely limited, and AI and technology help us provide women with high-quality advice that is personalized to them.
Let me put that question to you, Sergio. How are you using it for your business?
I definitely think I resonate with what was just mentioned, which is really about inclusivity. At the end of the day, in our context, AI isn't about some futuristic concepts. It's really about solving practical challenges that touch on everyday life. In our context, we're of course a mobility platform, so there's a lot of ways that we're applying AI that are really meaningful and solve real problems today. For example, we apply them in route optimization. We are, of course, doing asset financing and vehicle subscriptions. So also in the credit profiling of our customers, we're able to do this more efficiently. And I think that's really where we see a lot of the practical implementations of AI. But then there's also this other aspect, which is really interesting. And that's about bridging the digital gap. So in Angola, for example, we have a smartphone penetration rate of less than 40%. And what that means is that a lot of people are still using these feature phones that don't have a screen. So we have to think and use AI in very thoughtful ways and really targeted ways that allow us to bridge this gap between super frontier technologies, AI and so on, that allow us to communicate and access these people. So it's really about keeping them with us and making sure that we're also addressing the mass market, which is sadly not there yet, and we can't leave them behind. So it's definitely, in our case, about inclusivity and efficiency.
And just staying with you, Sergio, so basically you're moving from downstream to upstream in your business, right, to kind of make sure you bridge the entire gap there.
Absolutely. I mean, we end up playing quasi-governmental roles in certain aspects. So when you think about technology and infrastructure, in our context, especially in Angola, there's essentially two things that really matter to us. The first is the digital infrastructure, and that, of course, determines what sort of services you can offer and what technology you need to use. And that obviously is limited, in our case, smartphones. On the other side, you have infrastructure, which is physical infrastructure, so roads for logistics and transport. And at the end of the day, infrastructure really does also set a little bit of your limitations on what you can do today. But that doesn't mean that we don't dream about the future that we want to build in the coming years. But we can't leave anybody behind. So we really have to marry legacy technologies and frontier technologies in very thoughtful ways.
Thank you for that. Ola, we have a lot of startups here. And what would you tell emerging startups when they reach out for funding? How should their pitch look?
So I think, first of all, Africa just has super high quality founders, and I'm really excited about the quality of founders that we're seeing in our sector, fintech and health tech, but also across the spectrum. And I think, the greatest thing I see about African founders is they really believe strongly in the continent. In 2008, there were no unicorns in China. By 2018, there were almost 100. So the trajectory of growth that you see in emerging markets is, sometimes it looks like nothing is happening, then everything is happening at the same time. So when founders are reaching out to VCs for funding, I would say the first thing is just having a sustainable business model, having great unit economics, and making sure that we keep on talking about the problem, you have to be solving a problem, but sometimes you can find that there is definitely a gap in the market, but there's not a market in the gap. So being very conscious of making sure that there's a market in the gap. And thinking really broadly, Africa is the African Free Trade Continental Agreement has now made Africa the largest free trade zone in the world. So you have a market of not just your country, but an entire market of 1 billion people. So looking at regional expansion opportunities, thinking forward into how to expand into the Big Four. We invest in Nigeria, Kenya, Egypt, and South Africa. And one of the main things that we do is help our startups expand across the Big Four countries. Last quarter, in Q1, a South African company had the highest revenue that a telecommunications company has ever had in Nigeria. And it's a South African company operating in Nigeria. So we find sometimes in Africa that actually companies do better in other African markets than in their home markets. So really encouraging that regional and continental expansion as well, and being quite thoughtful about that.
But it's really the Big Four that people are focusing on, right? How do we kind of expand, like Angola, for instance, right? How does one kind of expand to other countries? Isn't that important as well?
Absolutely. So our fund focuses on the Big Four because we're still a small fund, and I mean mastering compliance and tax and all of the different elements a VC needs to understand to be able to help portfolio companies is important. But in terms of other countries in Africa, they all have their local angel systems at least. And there's lots of business angels, lots of skilled operators that can help the company scale to a certain level before going on into the Pan-African VCs. And we're seeing more and more that people are raising Pan-African venture capital companies. So I think, in the early days of venture capital, when I first raised my first fund in 2015, there were Nigeria-only funds and Ghana-only funds and Kenya-only funds. But now we're seeing, Partech just raised a $300 million fund for the whole of Africa. There's a few of our leading VC firms raising Pan-African funds. So the landscape is changing really rapidly. And that means, great opportunities for countries outside the Big Four, because those large-scale Pan-African VCs are not just bringing cash, they're also bringing relationships. And those relationships and introductions and market entry points can reduce the cost of market entry for companies that want to expand into other countries, and also provide market access initial first customers to do so.
I have a question for all three of you. Let me start with you, Sergio. What are the key trends that we should be watching out for over the next 5 years in African innovation?
Well, in a very practical context or implementation, what you see is that, again, the solutions that the key startups are providing are really touching on everyday life. So I think Sneha is an excellent example of that. In our case, it's on the mobility front, so it's not about just super frontier technologies and the ChatGPTs of the world, but really about how you move, how you eat, how you take care of yourself. And what that essentially means is, in our context, we see a lot of transformative innovation happening in which you will see the informal sector being the main target and being converted into formality. And what that means at the end of the day is, of course, more inclusivity. It means financial security. And that has been really a core aspect of our business. So it's definitely a lot of very smart technologies applied to convert the informal sector to a formal sector.
Sneha?
Absolutely. I really do resonate with this idea of everyday problems. Often, I think it is in the unsexy, boring aspects that we find African innovation being the most exciting. For me, it is really where the cross-pollination of online and offline will merge. And so that's something that's very key to us at Uncover. It's leveraging technology for scalability, but then leveraging physical infrastructure to ensure distribution, to ensure trust. I think one of the key sectors that I think is quite exciting beyond what's already mentioned is social commerce. So in the West, you have a lot of e-commerce and, of course, a proliferation of D2C brands. People who can take Western trends but localize them to social commerce, conversational commerce, WhatsApp, and technologies like that will be incredibly exciting.
So the first trend I think is important is the demographic trends that we're seeing in Africa. It's actually astronomical. I was at the Milken conference and Mike Milken gave his closing speech and it was called The American Dream. And he spent 20% of his speech talking about Nigeria. So I went in thinking that I was going to hear about the American dream, but if you watch it online, he spent 10 slides just talking about Nigeria, talking about Nigeria. Nigeria alone, by 2100, is going to be bigger than China. Africa's population is going to be 8 times bigger than China. And even though population growth isn't always followed by economic growth, it usually is. And if you look throughout history, economic declines have followed population declines, and economic booms have followed population booms. So it's really incredible to think about the fact that Africa is the only continent that, is still rapidly growing in terms of population, and that means, in terms of labor force as well. And there's a really interesting professor at INSEAD, her name is Professor Claudia, and she has done some interesting work about the age of peak economic growth. So the age that your population needs to be to experience peak economic growth. Last year, the Indian Stock Exchange was one of the best performing public markets in the world, and their median age right now, I think it's median or mean age right now, is 28. And her research shows that the best age is 30. So you can see that India is reaching its kind of peak in terms of economic growth. Most of Africa is between 18 and 24. So it's like investing in Africa today is like buying Bitcoin at $20 because it's just about to reach a peak. So that's the first trend, the realization of the economic growth potential by population. The second trend that I'm seeing is the globalization of African businesses. One of the most successful exits in Africa was a company called InstaDeep, and it was sold for almost $1 billion to Moderna, which is a global biotech firm. And this is African drug development, AI drug development technology. So we're seeing a trend, particularly in health tech, of Africans being able to build global solutions. And the last one is Africans actually leading in some areas. So AI is an example, mobile money is an example, and there's a great article in The Economist, I think it's from last year, September, that said that, that countries with great digital technology and low costs in terms of labor might be the people to lead the AI revolution. And I think, seeing Africans lead in more areas aside from mobile money is the third trend that I'm seeing. So realization of the demographic dividend, local to global, and we're already seeing businesses becoming global, being sold to global companies, and I've given a few examples, and then also leading the way in specific niches, particularly, as I would say, in health tech and fintech.
On that note, invest in Africa. Thank you so much. Please, a round of applause for our panelists here.